everybody. Welcome to yet another Midas Letter Daily. This is the week of May 26th, and we are coming to you live from the center of the financial universe here in Dunnville, Ontario, where we've flown in by private jet, private helicopter, private limousine, and are about to comment on the market situation with a degree of sophistication that you're probably not going to get anywhere else. Either that or we delude ourselves completely. And I'm here with my good friend and co-host, as per usual, Mr. Special Head Milewski. Ed, welcome back.
James.
Good to see you.
Yeah. Lots of crazy things happening in the world.
What is going on with these markets?
Well, and interest rates, the moves, I guess they say, it's like there's, everything's thin, right? It's like somebody blows hard, they can push it on a string, right? Something like that.
So Thursday, markets are up 2.1% and the SPX up 1.7% on the DJI.
Yeah.
Even up 3.14% on the NASDAQ. So we seem to be having a little bit of a rally in broad markets.
Just remember, the NASDAQ probably got clipped here in the last 6 weeks. As good a clipping as they've had for, it doesn't happen very often. And once this happened, if it ever does stop, there's so many shorts out there now that are convinced that the world's going to end, they'll start to buy because they can't. Like yesterday, NVIDIA came out with results. NVIDIA is one of the premier companies,
right?
Chip makers.
Yeah.
And, you know, immediately the stock dropped. And I was thinking to myself, you know, I'd buy that stock right now because it's dropped so much, you know, from 350 down to 150. And they're a premier chip maker. The things they're going to be doing in AI and all this and all that.
Yeah, so are you saying the only reason to buy it now, though, is because it's lost so much?
Well, and yeah, it always swings further. And I think they've swung further now.
So you don't think that this is just a dead cat bounce in a broad market sell-off bordering on, call it a...
lunacy?
A financial crisis. Are we entering a financial crisis?
I think we probably are still, but that doesn't mean you can't have a monster counter rally.
Sure.
That's the biggest rallies by percentages in the shortest period of time come in bear markets.
Yeah.
What are we in? We're in
bear
market. Look at it. Like that's all. You look at that. What's that tell you? You haven't seen that. Look, what kind of a drop is that?
That's a bear market drop.
Yeah.
I'd say that's a borderline financial crisis in the making.
You know who came out and said that Russia maybe have put us on the beginning of World War III and causing a Great Depression? George Soros. Remember George Soros?
Yeah, of course. George Soros famously shorted the pound.
And made $1 billion or something.
Right.
He's good buddies with Rogers, right?
Yeah, Jim Rogers. Well, Jim, they used to work together.
Yeah. Well, there's some people now starting to say, hey, wait a minute, maybe the Fed's tightening too fast.
Yes.
There's some nervousness out there.
Well, this is obviously going to be the zeitgeist from the market. And I think the Fed is going to. Well, I think this is where the rally's coming from. Is that the forward-looking market, which is always 6 months down the road, or trying to appear to be.
The market's market discounts everything faster than everything.
Right, and also gives a premium to everything faster than everything.
Yes.
So is this the market anticipating the return of the Fed put with maybe a little bit of extra oomph to make up for the lost ground here? Are they going to reverse course on interest rate rises and stimulus reduction?
Somebody said today they thought that maybe there may be a rate cut, not this time, but the next time. Like things are, it's such a dynamic market.
Yeah.
Nothing's static.
Yeah.
That 10-year rate, it got to 320, just over 320.
Yes.
Now I think it's around 273 or 4.
Wow.
That's a big clip.
That's a big clip.
And look at lumber. Look at the price of lumber.
Lumber's going the right direction from the perspective of somebody who's trying to finish construction on a home renovation.
Well, we're not trying to. We're going to take our personal bias out of the equation here, James.
We are? That's all I got. Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at MidasLetter.com. Or Gordon Meadows wants to know, maybe an unpopular opinion, but do you think ESG is all about the subsidies and access to funds? Question mark. The only thing in ESG that makes the business better for investors is the G governance. ESG is political, subjective, and has no clear metrics. Gordon Meadows, that might not be a popular opinion, but I think it's a common opinion, because after watching the EU approve LNG companies, natural gas companies, and nuclear facilities as ESG compliant, there's really not much of an environmental argument to be made. And the social aspect, well, if a nuclear plant explodes a la Fukushima, not much of a social benefit there, is there?
No.
No. And so, yes, the only benefit is the G. And by removing Tesla from the ESG, approval list, it just sort of demonstrates the political. Yeah, exactly. So, yeah, ESG in a nutshell is complete bullshit at this point. Yeah. PM, thoughts on Michael Burry speculating Apple is the next big short with a $36 million short position. Well, Michael Burry, for those who are not familiar, was the gentleman in the film The Big Short who made out like a bandit despite all of his investors demanding that he liquidate the position and return cash. He made them hold out and ultimately conquered. So he's not the kind of guy to discount. If he thinks Apple's a short, Eric Sprott once told me Apple was a short.
He did. They came out today. There's a report that comes out, and it says basically that they're saying Apple's sales and units are probably going to be a little softer going forward. These are the kinds of things that you got to pay attention to, because once they roll over, like, I think the difference between this and Amazon is Amazon's got infrastructure. Like, they really, they're not selling they're selling a lot of things that are theirs, but not so much like Apple. Apple's, if their phones don't become the best phones, they're in trouble.
But I think in a recession, Amazon's going to take a hit, because people, when the money's flowing and everybody's got dough,
right?
You're scrolling through Amazon,
taking a hit.
Yeah, no, but you're scrolling through Amazon, you're buying this, that, and all kinds of shit you don't need. Yeah, Amazon's taking a hit, but in a recessionary environment,
it basically went from 3,700 to 2,100.
Yeah, but they built market share by undercutting competitors. Now they've got the overbuilt infrastructure of all these warehouses designed to serve everybody who's doing impulse buying. The impulse buying is the first thing to end in a major recession.
Yeah, because we have to go back to the barter system.
Well, and I'll be going back to the grocery store with my bicycle because I can't afford the gas. Ugh.
Yeah, so
all right.
Who gives a shit about an electric car?
Yeah.
What about pedal car?
Well, what about a bicycle or a tricycle?
Yeah.
Rock My Stocks asks, there are predictions that there is now a 40% chance of recession. Is it only further downhill from here for investors? Well, I would say there's a 100% chance of a recession. I'd say the recession is already underway.
Someone, the guy Siegel, the professor.
Jonathan?
No, he's a professor. He's always on and he said he's raising his chance for a recession from either 20 to 30 or from 30 to 40. There's people that are starting to wait a minute now.
Yeah,
things are slowing down pretty fast here.
Yeah, if the government decides to print more money, and by that I mean obviously the Fed. And everybody's going to say, but the Fed's not the government. Well, the Fed is the government. The president appoints all of the governors.
I know, but the Fed's private.
The Fed is private at the discretion of the
banks,
of the administration. Their charter could be revoked if it was truly private. It'll never be revoked.
You fucker.
Yeah, exactly. So yeah, there's definitely a recession. However, there will be shining lights in the darkness of a recession.
Shining lights in the darkness?
The companies that produce the staples, toilet paper.
Well, you won't be doing much shitting if you don't got anything
I think you'll be shitting a lot. Yeah, but it'll be...
You know what? We are poised for trouble.
We're going into a dark time.
Having said, I do think we're bouncing today. Maybe that was it.
Yeah.
We're going to find out. More news to come.
I think that the bounce in the market this week is largely due to some anticipation that the Fed is going to reverse course, start printing, and lower rates again. Honestly,
well, okay, but oil's still. Well, you got to see oil roll a bit.
Yes.
Roll them.
Right. Well, that's why I think the global interest in ending the war in the Ukraine is accelerating, is intensifying, and I think that the there was a picture of Vladimir Putin with the contours of a bulletproof vest underneath his suit jacket. And somebody was pointing out that the guy's wearing a bulletproof vest now. So I think there's a lot of pressure to end this war, both from within and without Russia and the Ukraine. Obviously, the Ukraine doesn't have much say in the matter. It's like, Russia, stop bounding on us. That's got to get resolved. It can't go on forever. It's increasingly a war crime in progress. Ollie Rickman says, retail shows data continued to climb in April, but do you see future retail sales data continued to climb in April? Do you see retail sales contribute to hold steady even with the high inflation? No, I think that retail sales, Ollie, are going to decline dramatically, especially as the recession that is actually underway intensifies and starts to show up in the data. Don't forget, the data is always a look back. It's not a look forward or a look at today.
The frothiness and the ability to make money was directly tied to the government going from an increase in money supply from X to X plus 40% in a very short period of time. And now they've realized that if they don't put the brakes on this, nobody will be able to afford to do anything.
Right.
And that's the big fear. I mean,
Yeah. Hop says, can you explain what caused the collapse in Luna and Terra? Why there's so much volatility in stablecoins? Terra USD basically saw. So Michael Saylor, who has a business consulting firm that's publicly traded, he has put all of the value of that company into Bitcoin and leveraged the company to the hilt to borrow Bitcoin. He started to get margin calls as Bitcoin collapsed. He decided to liquidate a large holding in Luna, which caused the algorithm to increase the volume, the amount of Luna in the market. And Luna is the sort of the arbitrage account for the Terra USD stablecoin, which caused the Terra USD stablecoin to wobble. And so there was a run for the exits on Luna, which destabilized Terra. Terra had a $3 billion fund of Bitcoin, which it used to prop up Terra and Luna.
You're saying this was all intertwined?
Yes. I saw an interesting theory that this was actually a short attack, that a short raider leveraged up, borrowed Bitcoin, used the Bitcoin to slaughter Luna, go short Luna, caused the thing to collapse, which dragged Bitcoin down, so the short guy was able to cover, and he went short Luna and Terra as well, and just mopped up. Now that's a really heavy theory. We haven't seen any proof of that. That's just based on the circumstantial examination of what could have happened. But primarily, it was Michael Saylor covering a short call, or covering a margin call rather, that caused the onset of the problem, and it just snowballed from there.
You know what? Whenever, and I've been through a number of these over my career in the financial world, but whenever money gets tight, there's always margin calls.
Yeah.
And that again, as Apple goes down, that's affecting the margin of just about every margin account in the world.
Precisely.
If you think about it.
Precisely.
It hit $3 trillion. And you know what? Yeah, I'd be very careful here. You got to find the right companies. Find ones that, and the Dow seems to be outperforming now because the Dow is, your old companies.
Right.
Like they make horseshoes and things like that.
Horseshoes and saddles. Walking Paradox says, do you expect more traditional recession movements to start happening with bonds being bought up, etc., or is this period of financial turmoil going to be complete coin flip of strange movements? Yeah, I think there is so much volatility in so many sectors and subsectors, particularly in synthetic assets like cryptos, like derivatives, you name it, that it's very hard to expect any kind of predictability in the market, except the only predictability is going to be volatility.
Yeah, you might want to go to an area like crypto and say, okay, try to figure out what was the total market cap at the top,
yeah,
and what's it at now. And when you see 2/3 of it gone, you got to remember, there's a lot of disgruntled people. They don't want to hear about your cryptocurrency story anymore. They just want to They see blood. Well, I don't want to say that.
Has anybody told you that your glasses are completely crooked?
Yeah, no, crooked. Yeah. like my.
Is that the new look? This is to demonstrate our sophistication.
I look crooked.
Yeah,
just like my personality.
Spencer Liu wants to know what is the likelihood the Fed rate hikes not being able to stifle inflation in the next quarter? There's no way Fed rate hikes are going to stifle inflation in the next quarter. Inflation will be stifled by a recession to some degree because demand will start to evaporate. We're seeing that in the future price of certain commodities like lumber and copper.
You look at lumber, you look at copper, look at natural gas. You got to look at commodities. That's.
So there's a good point in there, Spencer, that do you think the Fed is saying, well, we're going to broadcast raising rates, we're going to broadcast withdrawal of stimulus, bring down the future prices of commodities, then we're going to flip the tables and go back to it, but the prices will already be down and everybody will be panicking, thinking, well, if they take off again, the Fed's just going to pull the rug out from under. It'll be a Fed rug pull as opposed to an NFT rug pull.
But NFT, non-fungible token?
Non-fungible token. Better known, non-fungible token. But we're not going to talk about non-fungible tokens because so many of those have turned out to be utter frauds. Better known in the lexicon of the sector, the rug pull, which I think all crypto is a rug pull, but that's a different story. If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Now we're looking at over $2 for gas. $2.50 plus for diesel in the Canadian context. This is like crazy.
I saw $2.39 Canadian for diesel.
So if the Fed does reverse course and starts to print more money and increase or decrease interest rates again, is that going to cause inflation to spike even harder?
Two things they're going to have problems with are energy and food. Okay? You can pretty well, a lot of the other things aren't that important, not that necessary.
Right.
Energy, they're down in Venezuela, kissing ass down in Venezuela.
Yeah.
Like, what's going on?
Yeah.
Have
you seen the scenes of rioting at Sri Lankan gas stations because there's no gas?
Sri Lanka's got problems.
Yeah, so this is it. Sri Lanka is what the world looks like when there's a broader recession. In the modern context, a market crash, supermarkets are empty, the gas stations are empty. We may be starting to... Well, and when you consider the cost of food production in the industrial agricultural complex is largely driven by the price of fuel. The price of fuel and fertilizers are the two biggest inputs in agriculture, and with fuel having doubled in the last 6 months, and the price of fertilizer has now tripled and then some, and in some places it's not even available. In fact, locally here, farmers are hoarding their manure and spreading manure on their fields as opposed to commercially available fertilizers because either they can't afford it or they can't get it.
Yeah.
So my big question is, at what point do farmers say, well, I can't afford to seed a crop because it costs too much in fuel and I don't have the fertilizer to get a return on my investment in seeding a crop?
Yeah.
When we hit that point, fuel goes too much more higher and these supply chain shortages in the fertilizer space continue, we're going to start to look like Sri Lanka. And that's the scary part.
Well, that's why politicians, it's one thing, they'll keep printing money if there's no inflation because, move along and all their friends get really rich. But when there's an element of anarchy potentially about to erupt, they may lose their jobs, the politicians. They don't want to lose their jobs. That's the last thing they want to do.
Well,
so they say, okay, we got to kill inflation. Even if it kills everybody else, that's what we got to kill.
Well, but what about the market? Well, the market doesn't care about inflation as much as it cares about share price appreciation.
I think somebody said today, 30 trillion of market cap has been lost.
Globally.
If that doesn't bring on a major recession, nothing will. They made a big mistake by waiting too long. Then they just did the opposite on the other side.
Yeah,
I think.
Yeah. So that's why we're talking gold today. if you
And
look,
gold, by the way, was down to 1780.
I knew that would get you going.
1850, 1860 the other day. It's backed off here.
well,
you
but
know.
still, if you look at, let's pull up a chart of gold here and have a quick look at the year-to-date performance of gold.
It's basically done nothing.
Well, it's entered the year at 1829.10, and at this point, even after this deep sell-off, so it was down a bit year-to-date, but it's now up to 1849.60, so still up a percentage point or two.
The point is, if you got your money in gold, and while the whole world's just falling apart,
Right.
you're holding your own.
Right. Your purchasing power is remaining intact.
Yeah.
Well, that's why we're talking about gold, and that's how gold is a hedge against inflation. In case you're wondering, how is gold a hedge against inflation? Well, you retain your purchasing power in gold, while the purchasing power of fiat currencies deteriorates.
But the thing they kept talking about, they said that the only things they think are really going to inflate here are food and energy. Everything else, because it's going to get that dire. Like
the recession is going to drop demand for all the industrial metals, copper.
Because the money has to go to food and energy.
Well,
because those are the two the things you need. Everything else is.
Well, there's copper.
You don't need a Gucci belt, for instance, do you?
Oh, I do. You don't need a Gucci belt.
No, I don't need a Gucci belt.
I need a Gucci belt. I need to clothe myself from head to toe in Gucci. No, I'm just kidding. No, but yeah, copper's backed off to 426. Lumber, here's a chart of lumber, 682.90, down from a high of, what was it, 1700 back here?
I think I got to 1700.
Yeah. Let's see, 1400. It got up to 1400 twice here. Is now selling off, but at the lumber store, the prices are still as if the commodity price is up here because of the long lead time between the commodity price and the retail price by the time it gets to the lumber yard. But this is why, this is an indication of anticipated decrease in value for housing due to the recession and higher rates. Is the future price of lumber is now so low because there's an anticipated reduction in demand.
These things feed on themselves. As
exactly.
Housing slows, the demand for lumber slows even more.
Yes.
It's a self-fulfilling
prophecy.
It'll be interesting to see how and energy, natural gas, here we are in the spring.
Well, let's
natural
pull up
gas is
$9.
$9. $9. As they say in Germany.
Yeah. That's a crazy market.
We're in a different time. A lot of people today that are around that haven't been around.
Yeah.
If you're a younger person, you haven't seen a lot of these things. You haven't seen rising interest rates.
Right. Let's look at the commodity price for lithium, shall we? Lithium has backed off slightly. It's gone from $82,000 per ton up here to $79,000 per ton. And the price of lithium for delivery at battery plant manufacturers is approaching $40,000. So it's not going down, it's going up. So those two prices are likely to converge, regardless of what happens in
what two prices? Price of what?
Well, the futures price of lithium is largely driven by the speculative interest in the future price of lithium.
You're talking about the spot price.
The delivery price, not necessarily the spot price, because most of the battery manufacturers buy lithium on term contracts ranging from 6 months to 2 years. Most of the lithium producers are looking for shorter term contracts because there's too much risk in a longer term contract these days. But they are now starting to see demand. The producers demand upwards of $30,000 to $40,000 per ton in a longer term contract. But I want you to look at this list of, these are all lithium companies here. You'll notice that this list is largely green, even on the year-to-date look. So they've all sold off because what can you sell when you're, looking at a sell-off? You sell what you can make money on.
But they are, as far as relative performance, the lithium sector has been as good as anything.
Yeah, here's the price of Albemarle, the world's largest lithium supplier at this point. Look at that. That is not a bear market. Albemarle's saying bear market, what? Pardon? And this is the thing about lithium.
And what period? Again,
this is year-to-date everywhere.
Okay, that's a good sign.
Yeah.
Okay, so year-to-date it's performed.
So here's Standard Lithium, which was the victim of a short selling report, back here. So they've seen a sell-off because they had this selling pressure. But year-to-date, it's not really, I guess, yes, it's down 36%. But that's largely driven by the short report. But let's take a look at Lithium Americas here. But look at, so this company had a bit of a sell-off. Again, let's make sure we're looking at the year-to-date here. Yes, we are. But it is now up largely on the year. So this is my point, is that going into this market sell-off, the only game in town that you can reliably make money on from a value investor perspective, you're not a day trader, is lithium.
Well,
The lithium
and oil
stocks.
and gas would perform.
Yeah, but the oil and gas, is going to do a nosedive as soon as the Russian supply is brought back online.
This kind of reminds me of the kind of move the oil and gas stocks have moved.
Sure.
And why wouldn't it follow? If price of oil is going up, price of lithium is going up for sure.
I don't think they're related.
You don't think they're related?
No. The price of lithium is going up because the supply and demand points are choking, and the cars are going getting more battery power.
I know, but because of that, that's why they move in step.
Well, but oil and gas is going up because 1/3 of the world's supply has been taken off the market by the Russian conflict.
Right.
Well, so, I mean, they're both supply, demand.
Yeah, supply and demand.
Supply. I guess I'm agreeing with you.
Yeah. Well, look. In a world where we're going to electrical energy,
Yes.
you'd think that the price of and obviously there's an energy problem because the price of oil is starting to move up.
Yeah.
A lot of people that are pro lithium are thinking, why would you buy oil?
Yeah.
Well, oil's going up because we're running out of everything.
Yeah.
I think that's the problem.
If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. We should talk about our sponsor from the last year, Voxtur Analytics. So Voxtur came out with a press release.
Big change, eh?
Okay, approval of share consolidation. Oh, this is in their financials. That's right, that's why. They didn't press release the share consolidation. But the company is asking the board to effect in its discretion, if deemed appropriate, a share consolidation of 20 common shares for 1 new share for every 20 old shares. So that's basically 524 million shares, which are now going to be 26 million shares.
Yeah, cut it right back.
But I have an option on 1 million shares with a $1.15 strike price. Now I have an option on 50,000 shares at a $23 strike price. So how does this help shareholders? If the stock consolidates and the price takes off based on these new financials, it's a good thing. The proof is going to be in the tape here, and we wait with bated breath to see whether, in fact, our option has become, a long-term possibility or a short-term disaster. We'll wait and see.
Does it become a raft, or does it become a luxury liner?
Let's see what happens.
Yeah.
Let's see what happens. So this could be good. If the company consolidates and the stock goes to $50, well, am I going to be complaining? I still got 50,000 options at $23. Yeah, no, that's good. That's $27 per share for 50,000. I'm not going to start to count my chickens, but so it looks bad, but it could be great, is my point, especially if they list on NASDAQ. They keep producing these quarters of double-digit Q-on-Q growth.
Keep growing.
They keep showing profit. That's the key. That's the key here. So if you're dismayed by the news, stand by. If anybody has a lot to lose by that news, it's me. But
they just raised some money again, too, didn't they?
$12.5 million at $1 a share.
Just top it up?
Well, but you look at all the short action on this stock, and it's like, did you just give the guys the ability to cover their short position? When did they know you were going to do a financing? And it's the usual sort of Bay Street crowd. So, not really impressed by that financing personally, and, but I still think that the company's financial performance...
you show money to someone.
Yeah.
When don't they take it?
The company's financial performance is going to be the bottom line. So I remain optimistic about Voxtur. I still think it's a great company with a great suite of products, and I think they're going to blow everybody's mind eventually. That's all I have to say about that. I also want to talk a bit about our other sponsor, which is NuRAN Wireless. Now, NuRAN Wireless did a share consolidation quite some time ago, and they did I think it was 15 for 1, I could be wrong, but they've been the victim of a sell-off. And this is another company that, our option's at $1.70 on this site, so we're way, way out of the money. But again, I really think that NuRAN's going to knock it out of the park. So NuRAN signed a $60 million USD 4G LTE contract with MTN Namibia. So there's 3 big players in Africa. MTN is one of them, and that's a huge deal. Minimum 150 sites within 24 months. So
I'm going to have to really start putting the pencil to paper here.
Yeah.
And really paying attention, because this company seems like it's becoming a much larger company very quickly.
Right. Right. And this is what people are getting upset about, is they've announced an $8 million financing, 8 million euro financing, but this is going into the subsidiary in Africa. It's not going into the publicly traded entities. So ultimately, it's pretty non-dilutive to the shareholders in the main company. So this is the thing. NuRAN's coming out with a lot of press releases that isn't moving the needle. They've got a lot of negative sentiment towards them because of the rollback that they did, and plus former management probably has some shares that they're lightening up on still. That's going to end, and I think when these contracts start to produce revenue, you're going to see some, well, again, in NuRAN's case, you're going to see it in the financials. Bottom line. There you have it. Anyways, so that's our show for today. We hope you enjoyed it. Please don't stop writing to us, because we just love to answer mail. And we'll be back next week with another lineup, and we'll see you then. Thanks. Goodbye.